so the last point was, so with Bitcoin at $5,800, I wasn't looking for a long, okay, so it was in one of these stairways down, and then it just went sideways at like 5,800. And so for me to get excited for any kind of long was 7,500. The support line was actually at 68. So I didn't want just to break the support, or the resistance rather. I didn't want to break the resistance. I wanted to go through, well through it, and then kind of do a sideways thing and start to look up again.
Good confirmation.
Yeah, it's certainty and clarity. And even more yet, and I mean, I told a lot of people this before I actually bought physically, not the futures, but before I bought Bitcoin again, 10K plus to buy any Bitcoin. Why the hell would I pay $4,200 more for Bitcoin than what they were selling for right now? Because the risk wasn't worth it. The risk just was not worth it. There was a higher probability, and long-term charts looked even worse than the short-term charts. $10,000 I would pay for Bitcoin when I could buy it for $5,800. Again, because I'll trade certainty and clarity, I'll make more money, and I keep my money. I keep my money with these rules. That's more important. And more important than like anything else is like keeping your money. I mean, that money, your account, that's your fucking child. That is your kid. That's your love. I mean, you wouldn't take $500 and say, fuck it, let's try it. But I mean, I'll tell you what, so many traders do that. I mean, let's see if this one works out. I've been losing all day. I can't get any worse than this, and they throw $500 away. I mean, it's ridiculous. You know, and I mean, every single trade, like you have to have certainty and clarity. I'll take that every time. You know, I would buy into a company if I knew that the person was, clear-headed, everything was going for him. I might not make as much money buying into this thing versus this other high-risk thing, but I would like, this guy had a huge track record. I mean, he's awesome. I mean, everything he touches is golden. It's been like that for 20 years. Where you got this kid who's like, I got this new idea. It's going to be earth-shattering.
Yeah.
We're going to make millions. And it might be, killing the gasoline engine. He has no experience. How's he going to get this? How's he going to get the money to make it operate? How's he going to build a factory to build these damn things? Where's he going to get the parts and stuff that's going to like build these engines? I mean, Like this other guy's got years of experience. I'm not going to make as much money, but it's clear. It's clear to me that he can make something happen if he needs to, because he has a huge back history of doing it. Bitcoin, on the other hand, 7,500. I was going to take longs on futures, 10,000, 10 to and 12,000 even. I was thinking about maybe even 12,000 that I'd buy the physical Bitcoin again. Why is that ridiculous? Because I want to keep my money. My money is I don't love money, so I really believe the root of all evil is money, but it's a love of money. But I do love my money. I cherish it because I work hard for it. It's like my children. It goes out there and works for me and builds more money. I care about my money, like as a friend. I wouldn't chuck a friend in the water that I knew he couldn't swim in. And that's how most people treat their money. It's like, this is real. This is like, is this an investment or is this garbage? You know what I mean? It's like, and again, it's like certainty, clarity. All the profit doesn't matter. I hope I killed that because it's like really, really big. I'll stop if I need to. All right. So it's constantly that move there. And you're always looking, again, you're looking to respond to the response. And that's really, really important, because if I do anything other than respond to the response, I'm chasing markets, I'm chasing money, I'm chasing being right. And you don't really know that, but I know that through years of experience, that that's what we're doing. That's called emotional trading. Every trade you take, you should plan out and process ahead of time. Mm-hmm. And so I'll share with you like what the process is of that with this trade here.
So would that be a double top there that you took?
What's that?
Is that a double top then that you had taken?
This would be a shoulder, head, shoulder pattern. So I'll take this out, I'll show you. So So it's a shoulder here,
Oh, I see, okay, on the far left.
so shoulder to here. I'll give you another program that does a lot of this drawing. It shows you the shoulder, head, shoulder, short. But I mean, this is my trade. Shoulder, head, shoulder, drop. I have another video, I'm not gonna go over that today, but you can actually measure the shoulder, head, shoulder, and it's pretty accurate. And you match it with Fibonacci, and it's like even more accurate. And the only reason it's more accurate, because with more tools, all you are is validating more groups of people. See, there's only like really 8, 9 indicators that really exist. And then there's variations of that from that point forward. So if you use tools that combine as many of those things as possible, you're just trying to figure out how the most people are looking at the market. That's how you engage with the market. How is everybody looking at this? You don't matter. And I say that a lot, but it's really true. You don't matter. How everybody else is looking at the market really matters. That helps you disassociate yourself from your own bullshit and bias. You know, the things that you tell yourself are just ridiculous. But you know what I mean? Like, if you're constantly looking at the world and how they look at it, it's easy to react and respond to how they're responding. And that's really what it's all about, is like, how do I react? And how do I respond to the response? You're looking at the world from their perspective, not mine. Mine does not matter.
You never use any like Elliott wave theory at all, do you?
I see
studied
the
that
market
a
a
little
little
bit.
bit, and it's okay.
I don't think it's so hard to recognize the different waves.
And it's just, you know, what's really hard for me is like less is best. I mean, it's really about your engagement with the market. It's more about me responding to the responses than it is like knowing someone's theory. I mean, I would rather spend, you know, 15 or 20 hours doing the exercises that we'll get to this afternoon. Like, you know what I mean? I'd rather spend 100 hours doing that than reading a book and going to seminars and doing other stuff, because of my program. You got to program yourself to be a trader. And so Elliott wave and different theories and even some of my stuff, I mean, you might be able to flush most of it, but some of it, like, you know, certainty, clarity, I'm not part of the market. I mean, there's some things that you'll want to leave here and never ever take away from your experience of life. You know, is Elliott wave good? Is this thing good?
Even Fibonacci's hard to.
Fibonacci's are very difficult. I mean, you know, the thing is there's so much abstractness to the market because it's multi-dimensional. You know what I mean? We're trying to turn something that's, you know, there are thousands of people engaging in this thing, and we're trying to look at it from a one-person perspective. And, you know, the closer you get to the 1,000 people looking at it version versus the one person being you looking at it, the closer you are to, you know, being in tune with the market and being in flow with the market. So in this example here, the way I look at the market, so it's bouncing around here. So the way I look at the market, here's a double bottom. There's a trend line here that I notice. And what I always do is, the first thing is that like within my trading zone, this is the trading zone going down here. So as long as it's here going short, planning ahead. You know what I mean? Like, I'm not looking for a short here at all.
Right. Yeah, you're on the other side.
Yeah. You're leaning towards long.
Because you're in the upper quadrant there.
Yeah, you're upper part, you cross over the magenta line, you're looking for a long. And then you look at the other
So when
indicators.
it breaks through the railway track, you're waiting for the retracement, which is kind of giving you the confirmation, I guess, to enter.
That is like the better trade always, you know. And again, it's like more comfortability, but it's like more probability. It's more probable when it goes up, comes back and touches like that middle area and goes back up again. You know, even if it goes sideways for a half an hour, I mean, that's your trade.
It's bouncing off that support, basically.
Yeah. Because that's another, you know, what you don't realize that this is just another EMA. That's just another moving average.
Yeah.
You know, that's all the railroad track thing is. It's a zone.
Yeah.
And so like when it comes back and touches that zone and goes back up again, that's like one of your better trades. You know, let me show you a couple examples of that. This is one here, so it goes up through, comes back down again, hangs out on it or near it, and goes up through it. Goes up through it, comes back, bounces around on it, and then goes up. You see what I'm talking about here? I'll circle it so you can see it a little better.
Yeah, I see it now, yeah, so it goes up through, it almost hits the outer band, retraces there, and then,
Yeah, you don't want to, breakouts are, I'll make it a little bigger for you too. Picture of it. That's the trade right there.
and so would you be drawing your Fibonacci from the lowest point there, just to the bottom left of the circle? Off of the blue,
It'd be drawn from somewhere over here,
oh, way over there?
go up, come down, see where this went. But you can draw from here.
Yeah, that's what I was thinking.
Sure, I can do it this way. Would be,
Off of that one. Then that would give you an idea of some targets.
yes. That's primarily what I use. You could use this double top here, and this would be like the first target area. Here, this double top area.
Yeah.
And to
So-
understand the areas better, you're gonna have to spend a couple hundred hours on charts in order to get there. It's
So
not easy, but it's worth it.
So the retracement where you entered there, let's say to one of the fib levels, like how many ticks are you talking on that move there?
So like somewhere over here,
Yeah,
4 points.
4 points. So
4 points on
times,
that one, and then
so
the double
4
top
times-
is
so 4 times 50, so 200,
200 per,
yeah, 200 per.
contract. The second contract would be around 99, around double top, that'd be 7 points. Let's just do like 6 points, because we just start realizing like double tops are areas. They're not really, it depends who's looking at them. And a lot of times there's so many people that know it's going through the double top that it goes just a tick or two above. And that's why I don't really call it, I don't consider craziness a level to measure. That's craziness. That's people just being, it's a double top. You want to see, usually on a double top you want to see a sideways, the retracement, and then go through it. You're not looking for the breakout. The breakout's how you have a, blow up. And the same moves over here again, happens quite frequently. Here it is again, so it goes up through it, goes sideways on it, and then breaks through it. That's a little bit better than the first time it breaks through. So if you're looking for breakouts, like second or third time is best. Never the first time.